Welcome to the 2023 recap. My name is Pedro Schicchi, I'm HedgePoint Soybean and Corn specialist, and in this video, we'll be going over the three main events that affected soybean and corn prices this year and what lessons can we take from them for 2024. As we stepped into 2023, corn and soybean prices were at high levels thanks to a tight balance in the US during the 22-23 season. Despite challenges in Argentina, optimism loomed with the anticipation of a robust crop in South America and improved US production in the upcoming cycle 23-24. Two significant reports solidified this perspective. In March, the Prospective Planting Report revealed that American farmers were planning to plant a lot more than expected, especially of corn. And then, May's WASDE maintained the bearish outlook for corn and introduced a bearish tone for US soybean demand as well. With a substantial 22-23 crop in Brazil being confirmed, prices face a downward pressure. On top of that, with a sizable American crop approaching, the market witnessed a decline in prices. Then came the US summer and the crucial development period for crops. Until May, expectations about the American crop were just that, expectations. However, with the seeds on the ground and a challenging weather from May to June, concerns grew, causing prices to rally significantly during the so-called US weather market. Spirits peaked at the end of June. July is the make or break period for corn yields. By the second half of June, weather forecasts for July were already looking better, and part of the weather premium that was built into prices was dissolving. And on June the 30th, the USDA issued its acreage report. The report revealed a lot more corn acres than previously anticipated, at the expense of soybeans, sending corn prices down and beans up. July's weather indeed turned out better, though not perfect, and corn prices stabilized in the upper half of the 400s by the end of the year. At the end of July, the critical period for corn had passed, but soybeans were still at risk. As the saying goes, beans are made in August. Additionally, the soybean acreage was now lower, further limiting national production. As such, soybean prices and volatility were sustained for a while longer. Despite less than ideal weather in August, soybean yield losses were not as severe as anticipated. Additionally, Brazil had ample soybeans to supply to the world, easing the foreign pressure on the American balance. Recently, however, the ongoing debate over Brazil's 23-24 crop reversed this logic and prices began to rally. With hot and dry conditions affecting Brazil's crops, the risks of a smaller crop in the country increased, which could lead to more export demand for the US. As the US balance is already tight, futures started to reflect these concerns. As we transition from 2023 to 2024, the market will closely monitor South America's potential production, assessing how much foreign demand there could be for the limited American beans. So, what lessons can we take from 22-23 into 2024? Although the background and dynamics can be different, the critical dates and reports mentioned will continue to be relevant, likely setting big price trends in the coming cycle.